Oh boy, oh boy. All right, folks, back to work. Boy, we got the two-legged pullback we talked about in last night's video. Great job on that. Hope you guys made some money today. Now, I hate to be the bearer of bad news, though, because the afternoon price action, these NVDA earnings that came out of the close, they may have just put the dagger in the heart of this bullish market. We'll talk about why I say that, of course, in tonight's video. And I'm going to give you guys a roadmap to make some money on some bull traps tomorrow as well. So I have a number of trades I'm tracking for what should be a very fun trading day tomorrow morning. We'll cover the entire roadmap tonight. By the time we're done tonight, you'll have an easy roadmap to make some money on Thursday morning as well. So charts are ready. Enough of the intro. Let's go find some more winning trades on Thursday morning. S&P and SPY is all ready, as you can see in front of me. Nasdaq, triple Qs are all ready. I have three, I think, very simple but very important clues on the charts right now that are telling us where I think the winning trades are waiting for us tomorrow morning. One of those clues, one of those big clues, is right here on these hourly charts. Let's widen this thing out here. Both the S&P and Nasdaq are very similar right now. One of three clues here. We have two ranges. One range down there, one range up here. Now, why is it important? Well, the most recent range we talked about last night on the video, how we might get dragged into a range down here, and it looks like that's exactly what happened this afternoon. That range is a new magnet. Now, the previous range up top here is now ripe for a breakout pullback. At this point, we have to assume with that range below us, as we go higher, there are going to be a ton of sellers trying to whack this thing back down with a breakout pullback off that previous trading range. At this point, unless something changes here overnight, at this point, it's very difficult to find easy buying opportunities until we get underneath that big range on the hourly. In these situations, we oftentimes have to go lower before we go higher. That's one of three very important clues. Now, I have two more, even more important clues than this on some tick charts. We're going to grab those tick charts, talk about two more important clues, help time some winning entries for tomorrow. Before we do that, though, let's check our schedule for tomorrow. There is a little bit of news tomorrow morning. One is the Philly Fed Index. That's the biggest news we know about tomorrow morning. Home sales, right? You don't want to forget about those Red Star news events at 10 o'clock Eastern time. Those are the two big news events I'm watching for catalysts tomorrow. But I think the big theme tomorrow, though, is the markets digesting what was good earnings out of NVIDIA, but everyone is long. Everyone is long NVIDIA right now. So unless NVIDIA keeps knocking these earnings out of the park, it seems like there may be a bit of a readjustment, recalculation as far as these insanely high expectations for NVIDIA. So tomorrow will definitely be a day of digesting, markets kind of maybe sobering up a little bit, right, of these crazy, crazy estimates they've made here with NVIDIA. But nonetheless, though, I've got 8:30 and 10 o'clock on my mind for tomorrow. Let's get back to our charts, though, because it's good to know when the news is. We can speculate about NVIDIA all we want, but the money is made on the charts. The only thing I trust in this world anymore, as a trader for almost 20 years, is the chart we're seeing in front of us. Let's go dive into some tick charts right now. Tick charts are based on transactions. They make entry timing a lot easier. And by the way, tonight, if you're watching for the first time, all the time frames are in the upper left-hand corner there, 7,000 tick chart. That yellow line right there is the 21 EMA, okay? So that's what we're looking at here right now. There are two very simple but very important clues here on these tick charts. One is that big, strong move that we saw yesterday. Now, like I mentioned earlier in the intro, we got that two-legged pullback. Nice, beautiful, if you watched last night's video, nice, beautiful two-legged pullback today. It was a bit sharper than we probably want it to be, but that's the way they go sometimes ahead of big earnings reports. Now, why is it important? Why is that strong move important? Because anytime we see a strong, big move like that, we expect a two-legged pullback and a retest of that high. That is two of three important clues. The final clue, and this is the dagger I was talking about earlier. The final clue is that trading range right there. Oh, it hurts me to see that range. The buyers, this range right there should keep these buyers up tonight because that range is a magnet. We've now rotated off the low of that range back to the high of that range. Now, put all three of these clues together. We have a bear range on the 60-minute, try to drag this market lower. We have a strong move higher, which wants to go back and retest that high right now. That's the goal for the buyers. And we have that painful but correct, that range down below us. Because of that, this is why I think buyers have their work cut out for them tomorrow. So, boy, I'll tell you, there are so many ways to make money in this situation. I have 5 trades I'm tracking for tomorrow. Let's cover a couple of them here right now on the S&P and SPY, and we'll transition to the Nasdaq here in just a moment. First trade, if we understand these buyers want to retest this high right now, and that range is a magnet, it's easy to see why one of my favorite trades here for tomorrow is a bull trap to short off that high. Now, when I say bull trap, I'm actually talking about 2 types of entry patterns I teach in our free video classes. I would love to run up. I would love to take out that high because that's where the buyers want to go right now. This is a horrible spot to be buying, right? You would never want to buy into that high, range down below. Horrible spot to be buying. It means a great spot for a bull trap. So let's wait for the pullback and see if I can't get some rookies trying once and trying twice. Look for a lower low in price. And once they try twice now I know where their stops are. Now I know where buyers are forced to sell their way out of their position. I can use a failure pattern to run back down again. Now, where does the market want to go? It wants to go back into that range below, but not just back into that range. It wants to rotate, right? As you guys learn in our free video classes, ranges love to rotate, right? So it's going to want to punch out that big low and take out a big chunk to the downside. As we go lower, this is where you can add to your winning trades by looking for what is basically a technical bull trap pattern. And that's a separation off the moving average. It's a lower low in price, a move just above that high. As always, I want to see a nice strong red candle closing back below that 21 EMA. So again, I have about 5 trades I'm watching for tomorrow. One of those trades is a bull trap off the high. It's a failure pattern, 1, 2, sell into stops into a technical bull trap. Again, you want that separation off the moving average, that lower low in price, and that trap right above that high. The second trade I'm watching for tomorrow is a variation of this. We may run up and there might be so much profit taking for the buyers and so many bears waiting to whack this thing back down, it may get whacked back down and begin to grind going lower. Now, in all reality, these are probably the easiest ones to make money with because anytime a market grinds down like that, it's easy. Just draw a trend line off the lows, mark that trend line, find a channel off the high. I want to go out, look left, and find some of these prior swing highs. Where the money is usually made is combining the top of that channel, the first test of that channel, just above one of those prior swing highs. Now, there's lots of ways you can enter this trade. I love bull traps. I also like to use failure patterns. Buyers may come in, buy off that moving average. I can sell into their stops with a failure, into a pullback combination. Now, remember, where does the market want to go? It wants to take out the other side of that range and probably wants to give you something like a pendulum swing going lower. That is my second of a number of trades I'm watching for tomorrow. It's a V-top reversal. Now, third trade, we may not make it up into this high. We may not get that bull trap off the high. We may wind up rolling lower. If we wind up rolling lower, I'm going to look for a trade I call the pop in pullback or the drop in pullback. So bottom line, if we end up rolling over here right now, we know the market wants to rotate, right? We know where it wants to go. The challenge, of course, is I don't want to sell low. So if we wind up rolling lower here, what I'm going to do is try to connect a channel off those lows, mark that up around the high, look left, find some swings, and ideally short that first test. Again, I call these the pop and pullback. In this case, it's the drop and the pullback. I just don't want to chase it. You might get lucky once in a while making money chasing trades, but you'll make more money consistently, in my experience, by waiting to short that first pullback. So if we do roll over, I'm going to try to connect these new lows here, find that channel, right, and short that first test, bull trap, buyer failure, any of the entry patterns you guys are learning inside the free video course. Now, I want to talk about a few more trades here, but let's slow down for a moment because we've covered a lot so far in this video. And I know most of you folks watching right now, you know these patterns, you're making money with these already. But if you're here for the first time right now, this might be a brand new language, a brand new strategy. What the heck am I talking about? Don't you worry though. I teach the entire roadmap, the entire strategy. I have hundreds, if not more, examples of traps and failures and range rotations. I cover so much more of this in a lot more detail in our free video classes. I'll put a link up top here for you. Don't you worry. Upper right-hand corner, grab that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us exactly where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries, start making more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries, if you've lost your confidence in your indicators or your current strategy, hit that link that popped up there, take that free video course. Everyone loves all the trade examples I share in that short video series. The best part is it's 100% free. I will also include all the important links you'll need to learn more about this stuff in the description of the YouTube video. Definitely start first on the free video classes. Everyone loves the free video series. Also, too, don't forget, too, the place to be every day is in our trade room. We trade together every morning, 8 o'clock Eastern time. I'll put all the trade room membership links down there for you. And keep in mind, too, kids, I post a lot of updates, charts, videos, mindset stuff on Twitter or X. If you're on Twitter X, give me a follow. You'll enjoy that feed. Again, all the important links you'll need to learn more and hopefully help you earn a lot more are linked up in the description of that YouTube video. Now, where we leave off here, 3 out of my 5 trades here for tomorrow. I want to talk about what to do down here. I want to talk about how to buy this down here, how to buy it, how to sell it, because again, we may have to go lower before we go higher here. So I'm going to talk about that a bit later on the Nasdaq. Before I do that though, what if I'm wrong? We just heard from NVIDIA. So even though it looks like this range is a dagger in the heart of those buyers right now, I can easily be wrong. I'm wrong quite a bit. Now, what if this thing explodes overnight? What do we do in that situation? Remember, up until just this afternoon, right? We're pretty bullish market overall. Look at that move, right? So I always cringe a little bit whenever I go bearish because the last couple of years, we've only spent a couple hours as a bear market, we rip back higher again. So I'm no fool. What if we start ripping higher here overnight again? NVIDIA earnings came out, anything's possible. If we rip higher overnight, what's my problem? My problem is I'm buying really high, right? I'm buying right into the underbelly of that prior range right there. I don't want to get caught chasing this thing and buying up there. So what do we do? What if this isn't as bearish as it seems like right now? What if it is running hot overnight here? Well, what happened back here? Go remind me, what do we do whenever we see a big move in one direction? We buy low. And to do that, we buy a 2-legged pullback, right? We trap the bears in and squeeze those stops again. So really, if last night's video, if the game plan that we saw today, if that makes sense to you, it's pretty much the exact same game plan we'll use tomorrow. If this thing explodes running higher here, now first of all, if we explode going higher, how would I jump in on the way higher? You know, I don't want to buy high. If we explode going higher, it's always going to be that separation off the moving average, that higher high in price, and that bear trap, right? Strong green candle now, closing above that moving average. Now, in my personal opinion, this is a bit more of a dangerous trade, right? Because you're going to push through that high there. This, in my eyes, is a half-size trade, a quarter-size trade, right? I would go small on something like that if I'm taking that trade. Once I get way up top here, though, now, right? Remember, breakout leg, measuring leg, think measured move, okay? Now we look for that deeper pullback. We don't want to buy into this area here. Now we look for, let me start today, 1 try, 2 try, right? Get below that moving average, 1, 2, think about a measured move, right? Think about a measured move. My favorite ones are whenever I can combine a two-legged pullback along with prior levels, right? Prior levels like that. Now, as always, I'm not going to pick a bottom on this because for all I know, this will collapse back down, begin grinding down like that. What do? You mark off that low, you mark off that high, and you short. That first test is the best test, right? If it grinds down like that, that's what you do, okay? So we don't pick that bottom like that, right? However, if we pull back on this now and we're starting to sit right on prior swings like this, right? Now we can use that same 1, 2, that same failure, right, into trap combination that we all love so much. So again, if I'm wrong on this, if this thing starts ripping higher overnight, the aggressive entry on this is going to be that bear trap getting in. Remember, when it comes to bear traps like this, it's all about that separation, right? That separation. As it runs higher, you'll see it'll pop up and separate, right? The pullback won't pull back all the way. That separation, that's your giveaway, right? That is always your giveaway. When it separates like that, buyers who are trying to buy the pullback off the moving average, they can't get in. And once it pulls back below that low, all the algos get triggered. Everyone wants to jump in on that trap going higher. Again, a bit more aggressive, but that's the entry pattern we'll use as we go higher. The better trade, of course, is we go way up, two-legged pullback. And remember, guys, I don't know how big that two-legged pullback will be, right? I didn't know how big that two-legged pullback would be. But once we saw the first leg, we knew exactly where the second leg was going to go, right? And that kind of gave us the bottom we're looking for. So we're not trying to pick tops and bottoms. We'll wait for that two-legged pullback, trap those bears in. And again, if we run up and it collapses back down again and V tops off that high, you know how to make some bank on that one, right? That'll be a pretty easy short, by the way, right? If that is what happens there for tomorrow. So that's the game plan as we go higher. That'll also apply to the Nasdaq. Now, like I said earlier, I want to talk about as we go lower here, right? As we go lower here, let's talk about that now on the old Nasdaq. Nasdaq triple Qs. And you can see a very similar situation here in the hourly chart here on the Nasdaq and the triple Qs here. Before we talk about Nasdaq though, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with all your trading buddies. Guys, that makes a huge impact on my channel because YouTube, believe it or not, rewards me every time you like, share, and subscribe. I know we're all busy people these days. Holidays are right around the corner. I get it. I appreciate you guys tuning in every evening, spending a few minutes with me here on these YouTube videos. So thank you so much. Really, thank you so much for all the likes, subscribes, all the support. Now, let's get back and talk about the Nasdaq. Nasdaq is the same basic idea. There are two ranges, one range right there, one range right there. Why is it important? Because the most recent range, recency is always very important. What is most recent is most important. The most recent range is the magnet. Whenever I see two ranges like this, the new range is the magnet. The previous range, and I mentioned this last night on the video. One of the most consistent things I know about technical analysis is breakout pullbacks. They're one of the most consistent things you'll ever learn. So whenever we break out of a range like this, we know the underbelly of that range is a huge level of resistance. This is why it's so difficult to justify being a buyer as we go higher right now. And why I have to be careful tomorrow if we do make that run going higher. Because again, as we go higher here, you bet those bears are licking their chops up there, waiting to short this thing back down into that range. And again, these situations, we oftentimes have to go lower, right? Oftentimes go lower below that range before we get those moves going higher here. Okay, so a lot of the same stuff there on the 60-minute time frame. Let's go to the tick charts now. Almost exactly the same here on the tick charts. We have a very strong big move and almost a picture perfect. I didn't believe when I saw it too this morning, that picture perfect two-legged pullback. Now, anytime we see a big strong move like that, two-legged pullback, retest of the high. You have to think right now that anybody who bought down here, they're going to be taking their profit targets up at these highs. Buyers down here become sellers up here. That's a very important part to remember. The second big clue on this one is that trading range right there. Ranges are magnets because ranges are where the volume is. Volume, right? It creates magnets on the chart. That's the way auction markets work, all right? Anyways, so as we go higher here, that same game plan, right? Let those buyers, let them take out that high. Let them get what they want and then trap those bulls in with the patterns we talked about earlier on the S&P. I'm not going to go over all the entire game plan once again because you can go back and watch the S&P chart. It's the same thing. Now, I will say, the Nasdaq has a bit more open space overhead than the S&P does. The S&P's breakout pullback zone is right there, right? So the Nasdaq has a little more space there, right? So the Nasdaq might have more of a chance here for that breakout, two-legged pullback and run there. Only time will tell on that. Now, let's talk about if we go lower. If we do end up rolling over and going lower, where does the market want to go? We know this by now, but we know this. It wants to make out the measure. It wants to make the pendulum swing. Now, remember, if we go higher and then lower, this will get adjusted. It'll be a bigger pendulum swing back down again. Once you learn how pendulum swings work, you'll be upset you didn't learn this earlier because they're almost like a secret cheat code for trading range markets. My favorite type of market is a range bound market because of these pendulum swings. Anyways, what you want to remember is that as we try to go lower here again, if we go lower, this range is going to try to break out pullback. All right. It's a very simple idea. Again, breakout pullbacks or ranges are one of the most consistent things you'll ever see in trading. The key is start paying attention to them. Most folks simply they haven't learned how to find ranges yet, and therefore they don't find the breakout pullbacks. So if we understand this, if we understand that idea here, okay, what I want to do is if we run lower, the simplest way to look at this is now we have a big move down. If I make a big move in one direction, what do we expect? We expect a two-legged pullback and a retest of that low, right? It's the same idea. Anytime we see a big move, I don't want to sell low, I want to sell high. So my goal tomorrow will be if this thing really rolls over and just drops, right, and blows through those lows here, all of that momentum is going to want to retest that low. So the easy way to do it is wait for that pullback, measure the size of that first leg, think about that measured move. Ideally, we'll combine that with the underbelly of that trading range, right? Somewhere around that area. I don't know exactly where it'll be right now, but that's the overall goal here. And then remember, as we pull back right now, as we pull back on that two-legged pullback, I'm not going to pick a top on this, right? We hopefully by now we know that. We're not picking tops and bottoms. I'm going to look for that two-legged pullback, trap the bulls in once, twice, let those buyers come in and walk right into that buzzsaw. Let those buyers wrap that rope right around their neck and short right there into those stop losses. And as always, that failure pattern can easily be an add-on now with a bear trap pattern. Now that bear trap pattern is so important. We're going to sell as high as we can. I don't want that bear trap entry. I don't want that after retest of that low. It's a two-try failure into a trap combination. Now let's have some fun with this. Let's kick this up a few more notches. If you understand that basic principle, you'll probably understand this one as well. If we make a run going lower, can I buy during that pullback? I can, but here's the problem. We're very bearish. It's very difficult to pick a bottom in a bear move like that. I get it. I like the idea of buying down here because I mentioned earlier, we may have to go lower, right, before we go higher here. So I like the idea down there. The challenge, of course, is momentum. So when I think about a situation like this, we make a run going lower. This is where a crown reversal pattern is necessary. It's basically a two-try failure with a bear trap involved, right? It's bears trying once, higher high, bears trying twice. These are a very specific type of entry pattern, and they're very specific because of that reason. Because I need to trap in some rookies here. Remember, momentum is all against me. It's not as easy as you think to turn momentum in the opposite direction. It's not easy to pick tops and bottoms consistently. The key is consistently. Yeah, you get lucky every once in a while, but consistency is much more difficult. That's a crown reversal. It's basically bears once, bears twice. It's a bear trap getting in. I have a lot of examples of those inside the free video class. Now, at this point right now we know one leg, two leg, right? Two-legged pullback. Okay, that gives me now my entry location. And again, hopefully it'll be somewhere right up around underbelly of that range here. We then, once we get up into the underbelly, now those bulls, right? Now all the buyers who didn't get in on the bounce, they're going to chase it. When I was a rookie, I chased the market. All I did all day long was chase the market around. That's why I lost so much money when I was a rookie. Now trap those bulls in, run back down to retest the low. Now, want to have some more fun? Let's kick this up one more notch. If I'm a seller down here, if I'm selling right here, where's my profit target? You know this. It's back to retest the low. Is this a good place to sell? No, of course not, because now we're way low on the 60-minute time frame. Now, all of that momentum has retested that low. This is the objective down here. This is where the market wants to get to. This is not where I want to start entering my trade short. So if this is a horrible spot to be a seller, it's a great place to be a bear trapper, right? A bear trap right now. Remember, we're not going to pick the bottom on this. We'll trap those bears in. 1, 2. Now remember, on a double bottom like this, I can be a lot more aggressive on the entry because I'm not trying to pick that bottom. Over here, it's tough to tell how far that move down will go. That's why crown reversals are necessary after a big move like that. But once I know where the bottom is, now I can trap those rookies in. I know where the bottom is now. I can use a failure pattern into that trap combination going higher. Now, in this one, very important, very, very important. The market now wants to go back up and take out that high right there, okay? Very important. My entries, my add-ons need to be in before we get anywhere close to back up into that high. And at that point, we'll reassess situation tomorrow morning in our trade room. All right, guys, fantastic job today. Let's keep it going for tomorrow. I know I covered some more advanced tactics in this video, but I think you guys can handle it, and hopefully this roadmap helps everyone make a lot more money tomorrow morning as well. Now, speaking of tomorrow morning, the best place to be tomorrow is with us in our trade room, 8 o'clock Eastern time. As always, folks, I'm going to put all the important links you'll need to learn more about this stuff. Join the trade room, take the free video classes, follow us on X or Twitter. I'll put all the important links in the description of the YouTube video. What a great week to spend so far. I hope you guys make a bunch of money with this information tomorrow, and hopefully I'll see you sometime soon trading with us in the morning trade room. That's an SOS. Remember, guys, in the meantime, be well out there. Be nice to the will ya? Have a great rest of your evening, guys. Adios, amigos. Bye for now.